You could have the best trading strategy in the world, but if you trade at the wrong time, you might still lose money. In Forex, timing is everything. Today, I'll show you the exact trading sessions when the market is most alive, so you can trade with the big players, not against them. In our last video, we learned what Forex is and how the market works. Now it's time to talk about timing, because in Forex, when you trade can be just as important as how you trade. By the end of this video, you'll know which sessions give you the best opportunities and when you should avoid the market. The Forex market runs 24 hours a day, 5 days a week. But that doesn't mean it's active all the time. Trading is divided into 4 main sessions, based on the world's largest financial hubs: Sydney, Tokyo, London, and New York. Each session has its own personality, different levels of liquidity, volatility, and the currency pairs that move the most. The Sydney session opens the week on Sunday evening GMT. It's the quietest session with low volatility and lower trading volume. Perfect for traders focusing on AUD and NZD pairs, but not the best for big moves. Then comes the Tokyo session. Here, the Japanese yen takes center stage. You'll see more movement in JPY pairs, but trends are often slower and more stable. Great for range trading or catching breakouts before London opens. The London session is where the magic happens for most traders. It's the busiest, most liquid, and most volatile session of the day. Currencies like the Euro, GBP, and USD tend to move strongly here, making it ideal for day traders and swing traders. Finally, we have the New York session. It overlaps with London for a few hours, and that's when the market is at its peak. USD pairs move sharply during US economic news releases. After London closes, things slow down, so keep that in mind. The best time to trade? During session overlaps. The London-New York overlap is the most explosive. High liquidity, fast price movements, and plenty of opportunities for quick profits. There's also a Tokyo-London overlap, but it's shorter and less active. If you're new, I recommend sticking to the London session and the first half of the New York session. Avoid the low-volume hours after New York closes or just before Sydney opens. That's when the market is often slow, spreads widen, and trade setups fail more often. Keep in mind, volatility doesn't just depend on the session. Big economic news, like non-farm payrolls, interest rate announcements, or geopolitical events, can shake up the market no matter the time. Always check the economic calendar before trading. Even in the best hours, the market can turn against you. That's why you need a solid plan, proper risk management, and a stop-loss in every trade. Timing is important, but discipline is what keeps you in the game. Now you know when the market is most alive.